Dobar dan, dobar dan. Veoma mi je drago što sam ovde. Ja sam, kao što ste čuli iz advokatske kancelarije, Unguran i Mićanovića, bio sam u životu i regulator i bankar i čast mi je što ću moderirati jedan sjajan panel, imamo veoma zanimljiv panel sa jako interesantnim govornicima. Dakle, to su 4 chief risk officera iz banaka, nije baš diverse, ali ostatak njihovih karakteristika čini ih potpuno fenomenalnim ljudima i ispunjava sve uslove trenutnog zeitgeista. Dakle, imat ćemo panel koji je sa savršeno diverzifikovanim govornicima, pomenut ćemo tokom panela i AI, i ESG, verovatno i geopolitičke rizike, sve teme koje su apsolutno obavezne za danas. Počeo bih, dakle, u stvari, I'll switch to English because in tradition, when we have somebody on the panel who is not the native speaker, our panel will be in English. So today we have 4 chief risk officers, 3 expats who are working at their position as expats, and 1 who remained at his home country. We have 1 fabulous lady and 3 exceptional gentlemen. And out of the 4 panelists, at least one, has a black belt in martial arts, but the other 3 don't know who that is. So first, I'd like to invite a lady from Montenegro who conquered the banking sector in Serbia and then moved on to Bulgaria. Milena Vukotić, CRO, UniCredit, Bulbank. Then Damir Ivaštinović, CRO and CFO of ERSTE Bank, Montenegro. Đorđe Stojanovski, CRO of Banca Intesa, Belgrade. And Sergej Kapustin, gentleman from the largest country in the world who moved to run risk at the biggest bank in one of the smallest countries in our region. So again, it's a great pleasure to have you all here. And I'd like to start with the headline topic of our panel, so higher for longer, when the rates will hit NPL ratios. However, it turned out that all this fear-mongering about inflation and high interest rates hitting hard the bank's risk portfolios and the quality of portfolios turned out to be an almost empty threat. So would you agree or would you disagree? How do you view this? I'd like to hear, for the beginning, I'd like to hear every one of you comment on our headline. Milena, please.
Hello, everyone. Prije nego što počne, ja bih iskoristila samo 30 sekundi da se obratim organizatorom, a da ne vidim gospodina Ivicu Tatara ovdje. Prvo, htjela bih se... pošto je tako svjetlo da mi ne vidimo ko je tu. Htjela bih se zahvaliti na pozivu. Prvo, cijelom Logate timu na organizaciji, gospodin Ivicu Tatar i Vladimir Ipajević na pozivu na konferenciji, pošto sam ja iz Crne Gore, ali spletom životnih okolnosti sam od početka karijere u bankama van Crne Gore, makar ovih prvih 20 i nešto godine. Tako da sam jako srećna što sam tu i također sam srećna što imamo firmu kao što je Logate, o kojoj sam dosta slušala najviše van Crne Gore. U Crnoj Gori čak to nije bila tema, tako da mislim, treba da budemo ponosni što imamo tako vizionarske i napredne firme koje mogu da dobacuju mnogo van granica naše zemlje. I ima još jedna dimenzija koja čini mi se jučer tako skromno provučena, a tiče se Logate akademije, pošto htjela sam čisto zbog ljudi koji ne znaju to da naglasim društveni doprinos koji vi dajete za obrazovni sistem Crne Gore. Mislim da je to nešto što sve i nas kao bankare čini srećnjima zato što tržište radne snage postaje kvalitetnije. Tako da mislim da zaslužuje jedan aplauz i hvala vam na tome. When it comes to the NPLs, I hope we will not be boring today because, okay, we are chief risk officers, so whatever you ask us, we have to put a buffer in our answers. So to be, even if I believe something was better, we will be like 10% above it. So completely honest answer, if we compare what we talked 2 years ago, maybe in a similar panel, so what we had in our projections, it was much better. So despite all macro uncertainties and geopolitical tensions all around, it proved that both households and corporates were resilient on this, with quite stable NPL ratios around all geographies, I would say. If you ask me more concretely now, where I'm in particular worried, where we still have to be where our focus should be are the leverage industries and customers. So we have, let's say, commercial real estate, which is highly leveraged industry. We are putting all the huge attention there because we have around the group huge portfolios in this industry. You know, high interest rates, then changes after the pandemic, increase of the online shopping, all increase in the decrease in demand from this side, bullet repayments of these loans with a high refinancing risk. So this is bringing the quite big risk here. So we are very cautious when it comes to that. And also, let's say the part of the SME sector is already showing some vulnerabilities going to the weaker stages. When it comes to the retail part, because somehow for me, corporate and retail are like different universes, completely different processes and different logic behind. Here, we had different kinds, not all the crises are the same and not all the markets are the same. I have, in the last 3 years, experienced from 2 different markets. When it comes to the Serbian market, maybe Đorđe will tackle that. There was a huge proactive measure from the regulator by limiting the interest rates on the mortgage loans. So we know that for some of the customers there was decrease in 25% in the monthly installment. They were limited to 4.8%, if I'm not wrong. While in Bulgaria we had completely different situation. There was a market of the low interest rates, which is because the deposits which are paid were deposit rates are rather low. So there was a boom in the residential real estate industry. We had increase around 30% in the mortgage loans. But then we have a different problem. Then National Bank came with the regulating, of course, what we are approving, with putting the stricter criteria for improvement. But this, and with this I will finish, here there is then responsibility of the banks, now together with the regulator, not to destroy the real estates which are already in construction. So there are many of the real estate projects which are entered into construction, and now we cannot just pull the brake like that. Otherwise, we will have problem with the construction companies and the investors in the real estate. So here I see the big responsibility of the banks and also in general what we are approving as settings, because in Bulgaria what we were doing is chasing for our profits. So let go to more stricter criteria. Thanks that regulator come to put just like a sign for us. So I think there is a high responsibility for us, especially for the second level of defense, let's say. Sometimes as we are going higher just to pull a brake. And here maybe I'll just ask one question. I was recently asked it on some of the conferences, like, who is the best customer-centric organization? Which is the best? The banks for sure not, but which is the one? Mafia. So they give you exactly what you ask. So sometimes we behave like, we should just pull a brake, not to give the customers everything they want, to protect first of all themselves and then us.
Thank you, Milena. Damir, what do you think? How would you assess the current environment and the impact on your portfolios?
In general, I would say, I think I can speak for the whole region. The banks are in general in a very good shape. So the ratios are pretty stable, and actually I would say that they were never better. And also if we look at the comparison between the Southeastern European region and the Central European region, the NPL ratios, we have currently, for example, in our group, around 3% NPL ratio in average in the Southeast European region. And in Central European region, we are only 50 basis points below or something like that. So this means that the region is converging. Regarding the question of the interest rate-induced credit risk, let's say, I don't see it as a striking one because the banks have buffers, interest rate buffers, and the share of, let's say, Euribor indexed loans is pretty low. So I don't see any systemic risk arising from there.
So you think it would, for example, because this is lasting a bit, it could last a bit longer, or the interest rates could take the U-turn and start falling, but you don't think there's a risk that clients of exhaustion of clients, that they would somehow, year after year, that they would not be able to meet?
It's in markets where the risk is not neglectable. So in markets where we have a significant share of Euribor indexed loan portfolios in retail, the NPL surge is actually happening. So if you think of Austria and similar markets, where the Euribor share in, for example, housing loans is 50+%. And also in the legal entities business, if we look at the commercial real estate. So we even had in Austria the largest bankruptcy in the history of the country. It was a commercial real estate actually triggered by the interest rates. And so the risk is here, but I would say in the region itself, it is not a striking one. And if I speak, let's say, for Montenegro, I think I wouldn't be so wrong if I would say that the share of fixed interest rate loans in Montenegro in retail is 90+%. And in corporate, there is a significant share of Euribor indexed loans. But on the other hand, we must admit that, I think this is for the whole region the case, that the rates are astonishingly low, the interest spreads for the corporates, especially for the larger ones. And if the Euribor increase, if it did have some effect on the corporates, then many deals were renegotiated or even refinanced by other banks. But let me refer, maybe since we are talking about the potential credit risk, let me refer to some other practices, let's say questionable practices, which are, in my opinion, can lead to a certain headache after a certain time. So, and I would say this is in retail banking. It's the presence of, it's actually most of the banks do not use a proper household income calculation when approving the loans. It is, let's say, some light version of creditworthiness calculation. This is market practice. And on the other hand, you have a large share of cash consumer loans unsecured with pretty long tenors, up to 10 years, and with questionably high DSTI ratios. So combined together, this could lead, in times when it gets tougher, this could lead to certain erosion of retail portfolios. And on the legal entities business side, we still have, unfortunately, quite frequently present, especially real estate project financings without closed financial structure. And if you think from the other perspective, actually, this is a reverse of the risk-taking chain. So usually in the project, it should be the first one who takes the risk is the investor, then the bank, and the last one, actually, the citizen who bought the flat, if something bad happens. But with these suboptimal, inadequate financing structures, we are actually turning that around. Right. And this is not something what should be on the long run. But even if it happens, if some of the major risk gets striking, I'm convinced that this will not, in none of the countries in the region, that this will not cause any systemic failures or larger earthquakes. Because simply, first of all, the banks are by far more equipped with capital. This cannot be compared with previous times. And maybe even more importantly, the risk management framework and the governance in the last 10 years, I would say, is a completely different one, and the portfolios which have been built in the last decade are of a complete different, much better quality than the older ones when we had systemic failures. And just to close, so I would say not less important is the big reason why we have such calm risk situation everywhere. Because who of us knows a bank which is struggling with NPLs? I don't know one. This is, I would say, to a certain extent, also due to the fact that we haven't faced a recession for quite a long time, except for COVID, but I would say this was a rather soft landing. But if it comes, and someday it will come, then the headache will come. And we all know from life experience, the longer a party lasts, the more headache on the next day we have.
Thank you. Đorđe, how do you view this? And are there any other than this story of inflation and interest rates, are there any other macro risk or global risks that should, worry us at this moment?
It has been now basically 5 years since we are constantly in some kind of crisis, starting from COVID, then war in Ukraine, then as outcome of all these fiscal monetary measures, we had been through high inflation, high interest rate environment, and this latest two phenomenon we were really scared of, and I was much more pessimistic than what turned out to be the outcome on risk of our portfolios. If we speak in last 2 years, inflation had much more impact on retail portfolio, because in Serbia generally, but particularly in Banca Intesa Belgrade, we had fixed term interest rates in retail portfolio apart from housing loans. So for housing loans, it was very much vulnerable to high interest rate environment, but thanks to government measures, central bank actually measures and cap on interest rates, this helped that this portfolio remained stable and default rates were very, very low. On the other hand, inflation significantly reduced disposable income of households, and this could be seen in increasing trend of cash loans or unsecured loans default rates that we've seen also in the bank and in the market. Luckily, inflation stabilized recently, and also wages increased materially in the last year and a half to compensate in real terms these inflationary effects. So we see now falling trends also in default rates in cash loans. Regarding of corporate and SME, lately we see some negative trends in SME. It's still not alarming, but there are some increases in defaults. And also, agri sector is affected by many macro events, starting from war in Ukraine, then significant increase in prices of fertilizers, then less usage of fertilizers, and the recent drought, extreme weather conditions in summer significantly affected crops of fields in Serbia, in the region as well. So agri sector is now, I'm concerned about this, and we see many problems here, but we try to proactively manage it with many, let's say, restructuring programs, relaxation measures that we offer to our clients whenever there is possibility to save them.
Thank you. And Sergej, now that Đorđe mentioned also these troubles of agri-sector, this also brings us to, I would say, a question that it's not only about cyclicality and cycles, that we are obviously, we could say that we are now in a cycle where generally clients are resilient to, with of course some exceptions, but this also brings us to the question of the climate risks and risks coming that are not maybe traditionally modeled in banks' risk management. Then that we see that, for example, drought, although droughts are not new, we've had them since civilization started, but obviously some of these risks have to be kind of chipped in and modeled in. So how do you view that, and what do you think about?
So basically, it's a very good question what to think about those risks that we haven't seen yet. But we understand that with some probability we might see some kind of issues in the future. And the traditional approach that most of organizations follows in the world related to that risk is the following. Just when it happens, do the risk mitigation plan, do the regulation, Basel 3, 4, 5, 6, and so on. And before the risk comes, usually it's not, let's say, common to think over, let's say, ESG risk, yeah? So right now there are a lot of thoughts, reports, but not so many practical measures, how to make actions today. And sometimes it's, so if risk is coming, it's wise to take a small actions today, rather than tomorrow might have kind of bigger issues. And from my standpoint of view, it's a good time to prepare for some risk when it's not came yet. But on some high level, we understand that it would come in. Economical is cyclical. So in my professional career, I'm working around 20 years in risk management and passed through 4 severe crises. And what's interesting, when I was coming to new crisis, the nature of the new crisis is different from the previous one. So, you know, that first crisis for me was the hardest, 2008, and after that each next crisis comes smoother. And when the say last crisis for me comes, okay, so everybody struggled, everybody worries that crisis comes, and they say, okay, let's do the same as we did previously. It means that we were already prepared. So what a regulator asks to do in operational risk? To create risk mitigation plan, BCP, DRP in advance. So just open the file and do, without any emotions, do things that already previously adjusted. So when COVID comes, in my situation, we already preliminary purchased licenses to remote work. We didn't need to be in a situation that urgently we need to decide something when people can't go out on the street. And therefore, as a risk manager, I definitely think that economic is cyclical. Risk are also cyclical. We don't know which risk would come next. Right now, I consider that for the whole region, it's a healthy environment. Companies demonstrate profit, despite the high interest rates that we've already seen, it's going down, and basically, banks and companies earn a lot of money on that, in different ways. But, to be prepared for some kind of negative part of the cycles, it's better to start in a positive cycle, when we have good financials, when we have good results, and it doesn't require too much resources from our side.
Thank you. And now it brings me to the next topic, that obviously we concluded that banks need to be proactive. In order to be proactive, the banks obviously need solutions to help them, and the technology infrastructure to help them in this kind of proactivity approach. Sometimes it's mandated by common sense and the best rules of best practices, sometimes also by the regulators. For example, currently here in Montenegro, there's probably a forthcoming legislative change asking banks to early recognize retail clients with financial difficulties. And this is something where you probably need the good technology infrastructure and the good solutions. And in this environment of low NPLs, probably majority of the lenders cut their workforce in their collection workout departments, but smarter ones also use this to invest in infrastructure. So can you please comment on this, Milena? Are you ready, basically, for what could be coming?
Yeah. Okay, about the technology, we were talking about all the advantages, so am I on? Yes.
Yeah.
So I would start with the area where, with all due respect, I don't see the big contribution of technology. It's on the corporate restructuring work outside. So here we had huge debates what to do with the people. Usually these were the people with the higher salaries, engaged in the very difficult restructuring workout cases before. So there was a huge debate what to do with this stuff, but thanks God my bank was thinking like, not like we didn't have a fire for 2 years, so let's fire all the firefighters. So we really kept these people because we need them not only for the crisis, but they really repay themselves in one serious workout or restructuring case we have. Also, again, back into my thesis of before that the banks are like responsible corporate citizens. You remember, Marko, we were doing 8 years ago together day and night on some of the huge restructuring cases in Serbia. So we need also the critical mass of the people in the banks, which will be supporting the banks, especially the customers, especially the smaller ones, which cannot pay consultants and the other, to drive them through. So it's not like we issue the loan and we are out, provision and go out. So there should be the critical mass of very skilled people. And here, apart from the early warning system and monitoring that they can give us, here in the pure restructuring workout cases to the corporate, I would not overestimate the power of any artificial intelligence or whatsoever. On the retail part, completely different. Retail is detail. So what we were doing all this, and if you ask me, are we ready? We were investing a lot in the infrastructure. Here we need the vendors, the companies with a good collection softwares. So, and we did, I would say, the first phase of the goal. We decreased the costs, which was the main pressure from our shareholders at the first place. But now what I see should come more is to deal with the effectiveness, so even to improve the collections out from these systems. We are working now on kind of a smarter restructuring for the smaller companies, where but also for the private individuals, where machine learning will tell us what someone is needing. We have the system, but we don't have a right product for each person. So it's not like each size fits all. So we have to recognize who needs grace period, who needs prolongation, etc. This is now when we are engaged on. But for the retail, I really do believe, while on corporate, you may remember that I was one of the market who was opposing to this huge disposals of the secured loans. Here, we don't make the value for the shareholders, I would say, in this way. On the retail part, I can say from my experience from Bulgaria, we are selling everything after 180 days. So what we collect until the 180 days, that's collected. Everything is sold to the predefined vendor and for predefined price for a certain period of time. And this is really then working like a machine. We have like in the consumer finance like €1 billion portfolio with very decent returns. But the prerequisite is really legislation, which I know in one of the countries here is not the case, and also the secondary market of the servicers. So, and internally within the bank, a complete end-to-end paperless process, because it's really on the button. So when you sell the portfolio, you are selling it like in 2 days.
Yeah. Thank you. Damir, are you satisfied with the solutions that you are having, and what would you, if you were to kind of draw the picture of what would be the ideal solution for collection or risk management overall, what would you do?
Yeah, here I think that first of all, as you mentioned, the upcoming legislations, regulation that we expect also in Montenegro. Here I would like, in the last years, there was the phase of digesting the alignment of the default definition. I think this is already done. I must say, we as a group, we anyhow in most of the fields in real time harmonize with the European Union legislation due to our group governance. But if we look at the market as a whole, so I would say most of the topics already digested. The bigger topics which are coming is definitely MREL. So because there we can expect a certain impact on the profitability, especially in the banks. But on the other hand, this will further enhance the stability of the financial system as a whole, and especially of the deposits. Regarding the innovations, let's say what is soon coming in the Montenegrin market is the EWS system for retail, so which is we have already implemented it. But I must say this is far away from a technically sophisticated or satisfactory status, so we would like to work on that. Basically, it's a two-fold system. Yeah? So you have on a single name basis, so where you have certain behavioral indicators tracking, and if with zero DPD clients, which are not on other DPD lists or however, and if that occurs, then you have to do something with these clients. And the other one is on portfolio level, so where you track the trends of certain portfolio quality indicators, and if something is suspicious, there is a traffic light system, and if something is suspicious, then you need to act and adjust something in your lending policies. But how technology could help us to manage the risks even better is if a good solution would cover this early warning system. So it could, if a client faces difficulties, for example, we have in the group certain countries which are far developed in that. For example, in Czech Republic, we have a system where when it's known that in a region, let's say the average salary for a software developer is 3,000 euros, doesn't matter. And if the system discovers that our client, who is also a software developer in this region, earns significantly less, then he's maybe something to be addressed. What happened? Can we help? And but without binding additional resources, especially in the retail business. Therefore, we also have within the group, but this is still not present in the region, the applicative solution where the workout restructuring cases are to a large extent being managed by the software solution. So actually, a client who seems to have difficulties, be it discovered by the EWS system or some other systems, is being approached by his m-banking application, asking him questions. And when he's answering, usually in most of the cases, this ends up in one of the standard solutions. So do you need a moratorium, do you need a grace period, do you need some prolongation of tenor? And this is done automatically. So, and there you save time to invest in hardship cases, in more complex cases, or also on the other hand on the advisory. And this is something where I think, and we as a group very much emphasize that, because we believe that as much as it is important to be a highly digitalized bank in the future, it is, I would say, at least as much important to be also a human bank, to keep this human approach, individual approach, and to advise the customers how to increase or improve their financial health.
Thank you. And Đorđe, would you agree basically with this, that technology can here help us fasten the solution for those who fall into kind of standard categories, so that really more time, that the risk officers at banks can devote more time to cases which fall out of the standard categories? And what is your experience with the solutions that you are applying at Banca Intesa?
Yes, I agree, definitely. New technology, AI, and generally any kind of automation has its area of application in any mass customer segments, so particularly in individuals and small businesses. On the other hand, in SME and corporate, I agree with my colleagues that it is more, let's say, on people, on cooperation with other banks, where there is a significant area of improvement, I would say. Speaking of technology, this low NPL rate environment that we manage actually to reduce from 20 to less than 3% in 6-7 years all over the region, allow us to invest more in the solutions for soft collection. So we invested in new software for soft collection in retail segment. We also investment in certain models which predicts self-cures for also in retail segment, and help us to not just be more efficient, but also reduce significantly costs outsourcing our collection to the agencies. Unfortunately, we cannot sell portfolios, as Milena mentioned. This would be a good solution for Serbia, but still it's not allowed. We also invested recently, last year, in early warning system, using some services provided by Serbian Bankers Association Credit Bureau. This helps us to identify some early signs of let's say, problems with the individual clients, since the Serbian Credit Bureau has information about all clients and from all banks. So very useful information that we use in early detection of some problems, and then preemptive, let's say, measures or offers to clients. So definitely I think that there is a broad area of application of new technology, particularly in mass segment.
Mm-hmm. Yeah, and I'm sure that our hosts and all the other vendors are ready to help banks and to make all these applications or improvements in the applications come true, and in that way to facilitate the transition that currently banks in the region are having, and their convergence to the obviously higher standards, in some cases making really a big leap to higher standards that banks apply in larger or more developed markets. And Sergej, what do you think about now, as one of the previous speakers said, we cannot have any panel without mentioning artificial intelligence and its application. So how do you view the application of AI in risk management? Is it only about cutting costs? Is it about productivity gains? Or there's a kind of more profound value add?
Well, good question, and especially a good question in Montenegrin environment. So when I came to Montenegro, it was 1.5 years ago. I started to meet with my colleagues in risk management, and so I tried to understand what the tool set colleagues use. And I tried to find people who knows just, let's say, being honest, SQL. And I didn't find so many people. And you know that if person doesn't know SQL, you just use Excel in some kind of traditional way to do AI on Excel, so I would not try that, basically. And therefore, we made a decision inside the banks, but first, before that implementation, we have to educate people. And we launched project CKB Academy. For CKB Academy, this year, 2024, we educated 14 Montenegrins. It's young, potentially talented people. They have full knowledge of AI, of course, advanced SQL, Python, so that kind of knowledge using that data. We build in new data warehouse, we build in a capacity to use the data, and that as a background to apply all the modern tools. And this is the first step, so it means that capacity and tech stack. And after that, we're coming to the optimization of processes. So when I came to review the process, how collection process look like, no surprise that every collection manager can say that, well, my current process is the best. We tried hundreds of cases, so I'm 10, 20, 30 years here in that position. I know everything, and I know this is the best way how to collect money. But so to challenge that, to do A/B test, to do kind of collection modeling, AI-based modeling, that's another journey. And my experience from the previous, previous engagements, that after implementation of strong collection models, it might reduce cost of risk by 30%. Even from the situation when current situation, say managers say that we have the best processes. And therefore, technology, modeling, capacity, and tech stack, I consider that it's already minimum requirements in 21st century to be a successful bank.
Thank you. And I would just like to hear your comment on, again, the topic of AI. So Peter Thiel recently said, talking about actors, that basically all the actors could eventually be replaced by AI, unless they are kind of really out of the box. Not to mention, he mentioned that he said something like you have to be sexist or racist or in any way not kind of politically correct in order to, otherwise you can be replaced. Elon Musk is also mentioning that a lot of AI will eventually replace very large chunk of human intelligence. So will bankers be replaced or risk managers at banks?
Okay, shortly I can share. I was not expecting this question, but I have my view on this. Okay, if artificial intelligence was, replace already the mind and body, but what I truly believe is that cannot ever replace the soul, which is connecting these two. But I heard one joke a few days ago, because there are many IT colleagues here. Because we have a lot of data in the banks, but we first have to strengthen the then portfolio to unlock for the AI. And then he simply tried but I have to do it in Montenegrin, Sergej, sorry. He was trying to explain why we cannot do it immediately. He was like, okay, ne ide USB u šuko. So I think that this is our problem first we have to deal with.
Yes, that's a good one.
Yeah, I would say I see that in that way, because AI is, or any other technology in the future, it will help us and must help us to reduce the lost time and the wasted resources for tasks, jobs which do not have a, let's say, a visible value added. So and currently, especially in the region, but also in other parts of Europe and the world, there is a significant gap which has to be closed there. And I see that the way that, for example, if we would in these critical areas introduce technologies which will overtake the standardized parts of, let's say, lending, if we would have 50+% or 70% on a fast track with minimum or no human interaction, and then it leaves time for advising the customers which need the advice. Also, one of these issues where the regulators become more and more eager on that is the KYC topic. So it's just check in your banks or what is the percentage of KYC accuracy of your client's data. So I believe it is rather a lower double-digit percentage than a higher one. And we also have a positive experience in our group where the m-banking application is overtaking that job practically. So if your data is expired, when you enter the m-banking, you cannot make the transaction you wanted until you do not actualize your data. And they managed to increase with this solution the accuracy up to 95%, which is actually some sort of maximum. And this time, which is not spent with things like that, can be invested again in this to make in future also parallel to the digitization, to also to work on the improvement of the human approach in the banking. So we say in ERSTE Group we want to be super digital but also super human.
Đorđe, Sergej, shortly, do you have?
I agree with the colleagues. Actually, I don't think that the AI will ever replace bankers. It will just change the way they work and switch maybe focuses of their daily job into something where they have comparative advantages like communication with the regulators, supervisors, colleagues, counterparts in other banks, etc.
But maybe regulators will be replaced by AI. Sergej.
I'd like to say that AI is just a tool, and we're in the beginning of journey how to use a tool. And I can bring a couple of examples how it's not to use a tool and to create another example how it might be used so later on and quite in the near future. So the most typical way how banks try to apply AI when customer is calling to contact center, please press 1 if you'd like to know about loans. Please press 2 if you'd like to know about deposits. So I had that. The next generation, that it's called AI, but it's definitely implementation of AI, but it's not the smartest. Say what you want. And customers say, I would like to receive a loan. Say you want loan or deposit. So it also might be AI, but it's a very kind of primitive way of applying AI. But what might be application of AI if customer is calling to the bank, and even don't need to call, it might be chat, web bot, and so on. And it's immediately answer, hello, Sergej. Based on your behavior, we understand that you probably need to change a PIN code on the card because you entered 3 times the wrong PIN code. Do you want to help how to navigate in mobile bank? And this is a great AI. So it's understanding the customer needs. It's already created a solution. Or let's say, based on our understanding, you probably would like to receive overdraft because your last transaction was not passed due to lack of amount on your account. Immediately, we can provide you 500 euros overdraft. Is it that you want? Say just yes if it's okay. And that's kind of AI to understand what customer needs, to understand different data sources, to integrate all together, to make risk decisions, whether to approve that or not to approve that, and to provide as more convenient way as possible. And I consider so AI in the future would help us to better tailor-made our banking products and communications.
Thank you. And let's leave it then also giving kind of food for thought to our vendors, and let's leave it on this note, looking into the bright future. Thank you very much for being with us today.